What's the importance of income when buying your first home? Coming up. Hi, this is Kai with the Kai Wong team, helping you better understand everything you need to know about New York City real estate. Today here, I have Scott Nadler from Loan Depot. How are you doing today?
I'm great. Thanks a lot for having me.
Thanks for being here. Tell us a little bit about yourself.
I am a residential loan officer with Loan Depot. I help people who are looking to buy a home. I help them with the financing for that, or I help people who currently own a home and they need to restructure their current loan.
People make money differently, right? So income's important, obviously, in getting financing. So tell us, what are some considerations?
What someone is paid is really important, but equally as important is how they're paid. So we will oftentimes talk to the client and get a better understanding of how they're paid. Are they a salaried employee and they just receive a W-2? Or are they self-employed? And if they're self-employed, how are they reporting their income? Because for someone who is self-employed, we can only qualify them on the amount of money that they're paying taxes on.
Got it. So the first one is whether they're W-2 or self-employed.
Correct.
Okay, so what's number two?
Point number two is really looking at someone's income and seeing if it's consistent. Is their income fluctuating? Is it changing from year to year? That's really important because if someone is earning consistent income and it's increasing, that looks very favorable in the eyes of a lender. On the other hand, if they're earning $200,000 a year for 3 straight years and then the 4th year they go down to $100,000, the bank's going to ask questions. They're going to want to know why their income dropped and is it likely to continue to drop, or is that just a blip? So we'll need letters of explanation to really understand what's going on there.
So if it's just a blip, they'll still consider it the higher income.
If someone's making $200,000 one year and $100,000 the next year, they may just use the $100,000 income. Other times they will do an average between the last 2 years. So it really depends on the specific lender and exactly what the fluctuation is.
So what's point number 3?
Looking at how someone's paid and how they report their income. Are they a W-2 employee or are they a 1099 employee? So for someone who's a W-2 employee, do they receive a bonus as part of their income? Has that bonus been consistent from year to year? Or if they're a 1099 employee, are they getting commissions from that employer? Are they a salesperson?
So for bonuses, right, if there's a fluctuation, for example, like 1 year is 200,000 and the next year is 100, do they find the medium or did they just use the lower one?
Bonus income, they will typically take a 2-year average, but if the most recent year is lower, they'll take the lower bonus. So for example, someone in 2016 received a bonus of $100,000, and then in 2017 they received a bonus of $50,000. More than likely, they're just going to use the $50,000 bonus.
So what's point number 4?
Point number 4 is if someone is switching companies or if someone's looking to start their own job, banks naturally will look more favorably upon someone who is switching companies in the same career, in the same industry, versus someone who is switching industries. I had a client years ago who had 3 different jobs in 3 different industries over an 18-month period. Wow. Not a lot of consistency there. Now, if someone's looking to start their own business, banks are very strict because we have no history of seeing how they're reporting their income as a self-employed person. So for someone who's looking to just start a business, typically they need to wait 2 years before they can get financing.
I know a lot of people, when they're first looking to buy a property, they really don't know how income structure is, like you mentioned before, W-2, 1099, commissions, bonuses. I have some clients making $700,000, but $500,000 of which is bonus. They think they qualify for much more than they do. So
right.
It's good for them to understand, talk to a lender and find out what works for them based on their financial situation.
And also understanding if a client is looking to switch a job mid-process, it's really important to know that early on because prior to closing, we will verify someone's employment. So if they're working for a company, we will call their employer to see if this person is still employed and if their employment is in good standing. If there's an indication that they're leaving, that could be a problem and delay closing. Ultimately, if someone leaves a job, we'll need to know that they are employed with a new company prior to closing at a similar income level, and we'll need, in most cases, 1 to 2 pay stubs prior to closing.
That's actually a really good point, and another video we're going to have in the future about the things you shouldn't do while you're getting a mortgage as well. So thank you so much for being here.
Thank you for having me.
The information is great. If you have any questions regarding what we discussed, please leave in the comment below. If there's another topic you want us to cover in the future video, let us know as well. If you're new here, consider subscribing. In this channel, we share with you buying, selling tips, market updates, and neighborhood guides. So if you're new here, welcome, and we'll see you in the next video. Bye.